Welcome back, everyone. This is our Gold Weekly Review. My name is Angelo Zittis, and this week's title is Worth Having for the Long Term. Gold traders enjoyed a bumpy ride since our last report on the 10th of December, as the precious metal was locked in a specific range, as we will see in our technical analysis, yet managed to provide considerable action for its followers. Gold was driven mostly by updates on the trade front, by the greenbacks movement, and some economic data, especially from the US. As it has been widely publicized, the US and China have agreed on a Phase 1 deal last Friday. The agreement may have not been appreciated much by gold traders, as market reaction was evident but did not last for long, and the movement was rather unsubstantial. Stronger gold movement to the downside was observed when Donald Trump announced that the US and China were very close to a deal on the previous day. The gold reaction observed on the US president's tweet was more intense than the official announcement, and the market may have priced in the agreement at that point. However, upon announcement of the agreement, traders may have not been completely satisfied by the outcome of the deal. First of all, they may have expected a better deal. Even though China agreed to purchase more agricultural products by the US and even to change its intellectual property and technology transfer laws, a large proportion of tariffs imposed in the past are still in place. For gold traders, this could mean the problem has been resolved partially, and so risk, which is a great driver for the precious metal, has been decreased, yet not at satisfying levels. Then again, the Phase 1 deal has not been explained in detail to market participants yet, which could seem somewhat unclear and unspecified to them. Also, on the same matter, in the previous days, China has indirectly threatened Germany on its automobile imports if the Germans refuse to include Huawei as a 5G provider. This is only a threat, yet if all the great economic powers of the world start imposing tariff threats, are things going to become safer or more dangerous in this case? This matter remains to be seen. Lately, gold has managed to stabilize higher according to the US dollar's movement. The greenback has been weakening for some time now. Characteristically, the downward movement of the US dollar tends to boost gold prices, as the two instruments have an adverse relationship between them. According to the DXY, which monitors the US dollar's strength against other major currencies, the greenback has been in a downward momentum since the 1st of October. The downslope, however, steepened even further after the end of November and continued into December. This could be telling us that gold's position at the moment could be supported by the weakness of the US dollar, and once the currency starts making a correction, then gold prices could move even lower. Some of the most important releases, specifically from the US this week, can provide further volatility for gold prices. Starting with Thursday, the 19th, we expect the Philly Fed Business Index and the existing home sales, both important indicators that could energize gold traders. Moving to the 20th, on Friday, we get the US GDP final rate for quarter 3, the consumption adjusted rate, and the University of Michigan sentiment's final reading. As a conclusion, gold in our view remains in a rather indecisive position, and as you will see through our technical analysis, may keep this motion throughout the holiday season. However, we say this with some hesitation due to the fact that gold is usually very sensitive to risk drivers and especially unexpected ones. In addition, we may be seeing portfolio managers or traders keeping gold positions for the long run due to many unresolved fundamental matters. In any case, demand for the precious metal could also be an important driver for its prices. Moving now to our technical analysis, this is gold's daily chart. I would like to start by emphasizing our R1 level and our S1 level. These two levels have been tested in the previous sessions, and we consider them as break or make levels. If gold moves higher and surpasses our R1 1479, the next possible stop could be the R2 1492 level, and the even higher level could be the R3 1504 on the downside if gold approaches the S1 1460 level and breaches it to the downside, then the next stop could be the S2 1450 level, and even low the S3 1444 level. Both the S2 and S3 have been seen previously in November. Also, take a look at our RSI indicator below our chart, which is currently running about between our 70 and 30 level. We would need more action to clarify exactly what is happening in this daily session. Yet at the moment, we may see some uncertainty prevailing. We would also like to warn for the possibility of some thin trading during the holiday season, and traders should exercise caution. Now, if you've heard something in this report that you found useful, make sure you apply it to your trading. That's the whole point. From everybody here at IronFX, we wish happy holidays, and we will see you soon.